Presidential candidate Elizabeth Warren taking on the wealthy at last night's Democratic debate.
I have proposed a 2-cent wealth tax on the top 0.1% in this country. This is how we build an America that reflects our values, not just where the money comes from with the billionaires and corporate executives. Senator.
This comes after our own Jim Cramer sounded off on the senator, or what executives on Wall Street were saying about the senator earlier this week.
I've got to tell you, when you get off the desk and you talk to executives, they're more fearful of her winning. I mean, I've never heard anybody say, look, she's got to be stopped. She's got to be stopped. I don't know. She's very, she keeps going up in the polls.
She's raised a ton of money.
She's going to win Iowa, I believe. She's a very compelling figure on the stump.
Meanwhile, Andy Puzder, policy advisor at America First Policies, has been outspokenly critical of Warren, out with an op-ed last month entitled "Elizabeth Warren is the Real Economic Threat." Andy Puzder joins us now, along with David Gamage, law professor at Indiana University, who has consulted with Warren's campaign on the design of their wealth tax reform plan. Andy, first to you. On the heels of those comments from Jim Cramer and, of course, the Democratic debate that we saw last night, your take on Senator Warren, and why would you argue that she's a real economic threat?
Well, look, I think enlarging the size of government materially, grossly increasing taxes on not only wealthy but even middle-class Americans to implement these large government policies would be damaging to our country, be damaging to economic growth. We're seeing incredible job growth. We're seeing great wage growth. We've seen a reduction in income inequality on the report the Census Bureau came out with last week, and a reduction in the poverty rate. We're seeing all the kinds of things that Democrats like Elizabeth Warren have said they want to accomplish over the past 10 years are actually being accomplished. And I think implementing policies that would be a setback for the private sector, be a setback for growth, would be damaging to the American public.
But Andy, strip out all of the potential other policies that you're inferring there that Elizabeth Warren would enact. Just focus on this. A tax on money above $50 million and stepping up more aggressively above $1 billion. That's not going to hurt the economy. It's just going to redistribute wealth, isn't it?
Well, I think that's you framed it exactly correctly. Is the point of tax policy to implement social justice? Is the point of tax policy to try and punish the wealthy and benefit the poor? Or is the purpose of tax policy to raise government revenue so that we can cover government expenditures? And what we've done with the Tax Cuts and Jobs Act, in fact, revenues increased about 4% from 2017 when we didn't have the tax cuts in place, fiscal year 2017. It's increased more than inflation. In other words, tax cuts have generated more revenue. If we can generate more revenue, that's great. If we're trying to punish people because they're successful, I absolutely disagree with that. I am not somebody who believes in wealth redistribution. I think it's damaging.
David, you consulted on this wealth tax reform plan. What went into the methodology, and how did you arrive at the results, or help the campaign arrive at these results in for this proposal?
Yeah, and most of the work I did falls under the sense of more complicated ways to do valuation right. But let's get back to the central issue. Our current income tax is broken when it comes to the 0.01%. The 0.01%, the super rich, pay lower percentages of their income in tax than the ordinary members of the top 10%, and they put a lot of resources into economically damaging tax avoidance transactions that I know my students advise on these things, and I write on them, to make this all happen. A wealth tax like Elizabeth Warren is proposing is carefully targeted at exactly where our current tax system is broken, restoring progressivity to the overall tax system at the federal level. And it would actually, I think, help the economy, not damage the economy.
But, David, your main criticism there could be rectified by closing tax loopholes. You don't need to add an extra wealth tax to even things out based on what you just criticized specifically.
So the primary loophole in the existing income tax is based on it being on realization. This has been true from the very beginning of the income tax, and it's very hard to fix. Ways in which it taxpayers, the super rich, exploit this fundamental problem called the Achilles heel of the income tax have gotten much more sophisticated. So basically we had what was from the beginning a medium-sized loophole that rich taxpayers have found ways to drive trucks and tankers through now. There are ways to fix this loophole without going to a wealth tax, but it requires doing something like what Ron Wyden has proposed, moving to a mark-to-market tax system, and that would be, like a wealth tax, a dramatic, complicated reform. I overall think a wealth tax is the better way to go, but we could argue about whether these loopholes are better fixed through a wealth tax or a mark-to-market tax. Either way, the main point is it takes fundamental reform, addressing the structural big problems of how the income tax gets at the returns to wealth. There's no small fixes here.
I want to shift gears a little bit before I let you both go. And Andy, I want to get your thoughts on what developments within the Democratic presidential candidate polling, when you see somebody like Senator Warren starting to poll a little bit more strongly here. When you look at the debate that happened last night, quite a number of candidates are becoming more and more hawkish on China and trade. And I wonder what you think it does to the current trade talks, especially given the fact that we have had reports that China was potentially looking to hold out and get through the 2020 election before striking some sort of deal.
Yeah, I think it's actually very helpful, and it's good to see something be more bipartisan. So it's good to see people wanting to go after China. Look, I know it's an election year, and therefore it's difficult for candidates on the Democrat side to be supportive of the ways that President Trump wants to pursue the negotiation with China. But I think if China realizes that, no matter who's president of the United States, we're one country, and we can't let them continue to engage in the conduct they've been engaging in, I think that'll be very good for the negotiations. I'd also like to point out on tax deductions, one that really benefited the wealthy was the SALT deduction. And all I hear from people on the Democratic side, not Professor Gamage, but others, is that we should reinstate the SALT deduction, which is really kind of contrary to what they're talking about.